Howdy, howdy. It's the lunch hour, and we welcome you here to Finance Friday. Coming at you live at Inside Production Studios, Phoenix, Arizona. For the next 30 minutes, we're going to be talking about your money, building your wealth, and quite possibly those Francisco Ayala hot stock tips. Like Chipotle, maybe?
That's
No?
Friday with Frank. That's right.
Palantir. My name is Robert Morales, RCO Network. Good people, better business, discovering the best of you. So here with Senor Francisco. Want to say hi real quick, sir?
Hello, everybody. Thank you again for having me. I hope that we're able to provide you very good information, very timely information. If not for anything else, but for a little entertainment, you got nothing else to do during your lunch break. Why don't you just stick around and see what we have to say?
Yeah, or stare at a couple bald guys talking
That's
about
right.
money.
What's sexier than that? Nice bald head, right?
I think I'm balder than you. I think I got less or more
You,
surface
you,
area on
you
that.
got a few. You got a few a little ahead of me, but don't worry, I'll catch up, man.
I'm holding on. I'm holding on a little bit more. So we'll be taking questions here live. If you type in those questions and comments in the comment section below, we'll be answering them as we go along. Please give us those little heart emojis because we love the loves. And if you like what you're seeing on YouTube, hit the little like button because, you know, your thumbs are not occupied. They're not, what else are they doing? Just if you click a little like button.
Put your burrito down and just, give us a quick like and keep on going with your burrito, stuff in your face.
That breakfast burrito, yeah. Extra cheese. Get off the extra cheese. That's not good for you. Dairy's not good for you. Frank will tell you. So, here with my esteemed co-host, Francisco Ayala from the College Group, Robert Morales, RCO Network. We're here to talk about money and what we can do to save more of it, right?
Save more, make more. I would venture to say use it more wisely, because I think for many of us, we get bombarded with a bunch of things on how to use our money. And we kind of just follow along, okay, you want me to buy this, and we buy this, and we click that, and we do that. And so Sooner or later, all the money's gone, and we don't know where it went. So use it more wisely. That's what I'm going to say.
Well, not if we're getting stimmies. Did you get the stimulus check?
That's gone too, But then the people put it into things like, the GameStops and whatever, and then they lose a good portion of it, 50% of it, and then they're out. And so they could have just bought a whole bunch of burritos, $1,400 worth of burritos with that, and it would have been happier.
Now, if you go to Taco Bell, they're only like 79 cents. So,
right,
a lot of burritos.
Make your money back.
We are from Douglas, so
you got to make your money stretch over there. So there's nothing going around. So
the funny thing with the stimulus check, because I'm glad you brought that up, sir. Maybe I brought it up. Who knows? Everybody's getting money, free money. Why not free money? Just give it out. Unearned money. No economy really. Just there. Here's your money.
No strings attached. Nothing to pay back. It's free. Here you go. You can do whatever the hell you want with it.
What'd you spend your money on?
Kids.
Oh,
kids. My kids take my money, man.
I mean, it goes out there, but I mean, typically when you give just free money out there, what, I guess globally, or at least in the nationwide, what are some of the effects that we see from that, from monetary easing?
Well, you are going to start seeing consumption. I mean, the whole point of, monetary easing or fiscal easing with the government, with the federal government, is to increase consumers, to increase consumption, to increase demand. Something's failing in the economy, slowing down, so they're trying to pick it back up, right? And so that's the whole point of it. It's increase in consumption, a pickup in the economy, a pickup of jobs, or meaning the jobless rate goes down and stuff like that. But all that free money also comes with some unintended consequences, the very important one being inflation, right? Because the way inflation works is you have a lot more money in the economy chasing the same number of goods. You can only produce so much. Companies can only produce so much. Yeah. Even if they pick up, if whoever starts building more, they can only pick up so much, but you have a lot more money. And so that's what causes inflation. That's what causes prices to increase. People are bidding up prices until it starts getting a little out of hand.
Yeah, and I think the biggest one in the news right now is really housing. The housing market is just going nuts.
right?
You're seeing anywhere from 15 to 20% year over year gains, and
Yeah.
that's really not good. I mean, it's good if you're trying to sell your house and you're walking away with $100,000, $200,000. I mean, that's fine. But if you have an economy built on stimulus, on money just being spent out there, I mean, the price of the dollar, the value of the dollar is just going down. If it's just, well, don't worry about it. We're just going to get free. Correct, sir?
Yeah, no, it is for sure. I mean, so I guess it becomes, it's not sustainable, right? 15% increase year over year on anything, right? Because, if you start compounding 15%, you'll see the chart, is an exponential chart. It's not sustainable, whether it's housing, especially in housing, because, a lot of people get priced out, but in food and electronics and anything like that, it's, I think we talked about this before in the show. The Fed does want inflation. The Fed actually rather prefer inflation than deflation. So it always targets about a 2% inflation. That's kind of their target. But once it starts getting out of hand, then the Fed has to take a lot more steps to control inflation, increase interest rates, and increase the fiscal government too. But that's when the economy really starts, can get impacted and starts kind of cooling off, which can lead then to a recession or something like that.
I mean, is that kind of the idea that prices inflate to the point where that lower percentage still, brings in a bigger margin, on that? I mean, if something was, 100,000 and you charge, 1% on it, and then the cost of that inflates to 200,000 and you only charge a 0.5%. Isn't that really the kind of the same thing? Maybe. My numbers off. I'm not a numbers person. Don't
Well,
listen to me. You're gonna lose all your money.
I really didn't follow the logic there, to be honest with you. But the point is that you don't want prices deflating. That's for sure. You don't want prices deflating because you get into this mentality where, well, it's going to be cheaper a year from now, so I'm going to hold off on buying. And it's going to be cheaper, and that everybody gets in that mentality, and nobody buys, and so you have a slump in the economy, and so nobody wants that. So you want prices to increase, but albeit slowly. The way companies make their money is they try not only to increase that a little bit higher, but also to cut their costs, right? And so that's why they start shipping, manufacturing across the seas, get cheaper and stuff. So really, even if the demand, even if the revenues is going up slightly, their profits are increasing a lot more because they're cutting costs.
Yeah, and I see. I have an article here I can post really quick. So the global food costs are climbing, and it threats consumer wallets. I mean, I don't think we notice it as much. I don't think we really see it when the price of something like canola oil or whatever oil this is, and it inflates only like 2%, 3%. It's very small. I mean, it's a $2 item, and then you may be paying $2 today, and then it inflates 3%, and then you're paying what, $2.06, and it's like, oh, okay, well, it's not so bad. I'll keep paying it, but percentage wise, I mean, that's a significant increase, and you see these your overall like grocery bill just increase, and it's quintessentially out of hand.
No, yeah, I mean, I see it. Hey, I saw it at Costco this past week, man. I have my nutso. I'm a big fan of that nutso thing, kind of like a peanut butter stuff, but with different nuts. It used to cost 11.99, and now it's 12.99. I'm like, well, here it goes. But yeah, it just creeps up on you, right? Where you really don't know it. It's $1 here, 50 cents there, but then it creeps up. And basically what happens is things start going, if inflation starts going a lot faster than 2%, let's say it's 5%, most people don't get 5% raises each year.
Yeah.
Most people, for the vast majority of the people, they get 2, 3, 4 if they're lucky. And so what that means is that next year they're worse off because their earnings, and they won't tell this, right offhand, but their earnings are now buying less and less. And so you do that 1 year, and you do that another year and another year. And so, 5 years down the road, your paycheck is buying quite a bit less. And so, yeah, I mean, inflation can be a problem. Now, Powell was on the news a couple of days ago, I think it was yesterday, saying, yeah, inflation is picking up, but it's nothing that we have to worry about.
He said temporary rise in prices.
Yeah, right.
I
Temporary
don't.
crisis, inflation, whatever. And so basically the thing is that inflation has been below the 2% target for so long that they actually come. This is a very recent change in monetary thinking, is that maybe it's okay to go beyond 2% for a while and keep it there, because we've been for under 2% for too long. It doesn't matter if we go 2%. It doesn't matter if we go to 2.5 or 3, because we've been so low for so long that we can, but it'll be fine. It'll be fine. And that's kind of the mentality. But I mean, will it be fine? Can it get out of hand? Can it go from 3 to 4 to 5, and then it starts going up there exponentially, where the Fed can't control it anymore, and it gets out of hand. And then we have the inflation problem of the 1970s.
Yeah, and then again, it's across the board. So you're looking at products. Something as simple as canola oil going up like 10 cents, 50 cents, whatever. It's like it's really not that bad, and it's not going to break me or anything. But then you look at something like taxes. So in this slide, the U.S. property taxes jump up about in 4 years, and Sunbelt is catching up. And so this is what shows a 2% increase, and what that means monetarily. So in New Jersey, a 2.2% tax rate increase for New Jersey's has meant $22 billion. It's not until you actually get in the bigger ticket items, the larger ticket items, you really see the dollar figure really factor in.
Yeah.
And then in a society where, like, if I go back to unemployment, for instance, we're not growing our economy, where even in Arizona. So this is Arizona's labor statistics. So unemployment rate is still pretty stagnant. I mean, we picked up a little bit just after the new year, but we're still at 6.7 even in February.
Yeah, right. I mean, it has been. I think the next couple of months, it's going to be very telling, because now is when we really start to see the reopening of the economy. People are getting their shots. A lot of them have gotten one. A lot of them are not have gotten two. And so restaurants are going to start opening up. Restrictions are start coming down. So I think the next, couple months is going to be very telling on what is going to be the long-term trend of that, of the unemployment rate. Is it going to go back to less than 4% that we had right before this whole thing started? Or will it stay a little elevated, 4.5%, 5%? Because that's a little elevated. And so, because that's gonna explain a lot as far as how inflation, wage inflation. If we start seeing a lot of wage inflation, then things could start getting out of hand for sure.
Yeah, and monetary easing doesn't necessarily help with growth, because then people remain stagnant and they grow dependent on government. But that's a whole other conversation.
Right.
So we're here live with Francisco Ayala from the Collards Group. He's here to kind of share his thoughts. He's a financial advisor, but we're just a couple guys on YouTube right now just sharing conversation. So don't listen to us. You might lose all your money. This is just purely for entertainment. So if you want to call Francisco about your particular situation, or about your whatever's going on with you, you can reach him on the side.
Yeah, for sure. Again, it's this. What we do here is just merely to provide information. I can provide you my opinion. I've been following this for quite a few years, so I know enough to make some damage. But my love and passion is really helping people with personal finance. Right, personal finance meaning, are you making the most out of your money? Are you living up to your dreams with your money, or is your money, kind of just going where, places that you don't want it to go, and you don't even know about it and stuff like that. So my job is really helping people live authentically, helping people live, wholeheartedly, and using the money, because that's really one of the most powerful tools that we have, for better or for worse, using that money to kind of live that way.
I definitely want to grow what we have in existence, and look at not only the economy, but local economies, and kind of your own personal situation, and really make good decisions for yourself. I think Frank's here to help, and you can do that by sitting down and, talking about your situation. But that's on the side. Today is just about purely entertainment.
Yes.
Because don't listen to me, because if you listen to me, you're going to lose everything. So. So we're here. It's week 14 into the new year. It's coming by fast. We're already in April. Things are going crazy. We're talking about inflation. We're talking about Francisco's candy habits and whatever he buys at Costco. I think he likes the big tubs of mustard.
It's not candy.
Probably won't
It's
admit
nutso, man. Look it up, nutso. It's very good. It's very good for you.
it. Boy. What about peanut brittle? You like peanut brittle? No. Any stock in peanut brittle? Candy corn.
No, please.
Not buying any stock in candy corn. Okay, so that's one tip. Don't buy candy corn stock.
Right.
So we're talking about inflation, and we're talking about the cost of goods going up, and how that affects us. Again, monetarily on a smaller scale, if you're buying just, canola oil, if you're buying the stick of butter, that 10, 15 cents doesn't really seem a lot. But when you're buying $1 stick of butter and you're paying 50 cents more, that's 50%. And if you look at percentages, if you're not making 50% more in your income, then you're really losing money at the end of the day. The value of your dollar is going down.
Yeah, but see, this is my thinking again. It's a personal opinion, but this type of inflation is very short-lived. When we do start seeing that jump, 5%, 8%, and stuff like that, to me, it's kind of more short-lived, where just things that got a little too hot. And so it's a bubble. It could create a bubble. That bubble will pass. The book's gonna pop, and then we go back to having more normal inflation. These are kind of short-lived. There's a structural problem in the U.S. and in a lot of advanced economies that will keep inflation low. And that, again, we talked about it, I think, was the demographics of this country. We're getting older. There's a lot of people going into retirement. They're not producing as much anymore. They're not. And then, to be honest with you, a lot of older people, they don't consume a lot. They don't consume as much as, the younger generation. And so that you see that in Japan, you see that in Europe and a lot of European countries where inflation is so low because it's a structural issue with their economies, right? Demographic issue. And so these types of inflations that we're talking about, the canola oils and stuff like that, is probably going to create, trouble in the short term, but I don't see it being a long-term issue.
Well, it's also quantity too, because anytime, like Jerome Powell got on some sort of live a couple days ago or yesterday or something, he's like, "This is just a temporary increase in our process, and so this is not inflation." But you look at anytime any business or anybody has raised their price, I've never seen them decrease that price. And on the reverse end, you remember this in Douglas, right? Remember going down, I forgot what it was, Burger King. You got the pizza out there, and you go by the Rebel, and you had Burger King right there on the corner.
Oh yeah, for sure.
Remember on the side it said
without onions.
Remember on the side it said home of the 99-cent Whopper?
Yes, I do.
Yeah, and that was like in the 90s, right?
Right.
So another circumstance of inflation and kind of what's happening. I went from the home of the 99-cent Whopper to the 99-cent Junior Whopper. And that was like in the early 2000s. And now you have the 99-cent cheeseburger. And then 5-10 years later, you have the 99-cent Junior Cheeseburger. So you went from this massive like hunk of a burger, the Whopper, to now this little tiny like little pebble of a Whopper. And so those are the other ways. It's still 99 cents. But it went from that big old thing that you couldn't finish that you're like, oh my God, to like, okay, I think I need to buy another one.
Yeah.
In effect, you've bought twice as much, but have purchased twice as little.
Exactly. And it's exactly what I said earlier is that, if inflation starts picking up, substantially here, I don't see a long-term issue, but if it does, and your inflation is going 4 or 5%, and you're getting 2% raises, then yeah, your quality of living is decreasing for sure.
And I've been really focusing on paying off my debt. And I think between Violet and I think she only has a little bit of credit card debt, so we've been really focusing on that, anticipating the worst case scenario. If you get on YouTube or any of these channels, you hear any of these guys, it's all doom and gloom. Everything's going to go away. At the end of the day, we all still have our lives, and we all still have, stuff, but stuff isn't everything.
Right.
Is there ways that we can kind of, anticipate? Like I said, I'm paying off my debt, and that's just a personal choice. It's an opinion. I'm sharing myself, and I'm sharing what's in my portfolio.
Yeah. I mean, debt is definitely a very personal issue. And it's personal for me too. You know, I used to believe a lot in debt. You get, because you're going to hear this a lot. I mean, a lot of people, there was an article, actually, I should have brought it up, but there was an article recently on the Wall Street Journal that the amount of money being put into the stock market is borrowed money. You know, it's people going on margin because they're saying, okay, well, I'll pay 3% here for my margin account, but I'm going to get, 10% returns or 20%. Or in the last year, the stock market is up 50%, over 50% from the bottom of March of last year. And so they say 3% and I can get 20%, it's a no brainer. Or even the housing, I could borrow, or anywhere I could borrow at 4%, but I can make 8% or 10% on the stock returns. A lot of people feel comfortable with that. Personally, I do not. Okay, because I got burned once already with the last housing crisis, and so it's a very personal issue and something that I think people, our viewers out there, they should stop and really ask themselves: are you one of those persons that lives fly by the seat of their pants and doesn't matter, live for today and stuff like that, or are you a little bit more conservative and do you want to have a little game plan for the future? Because living on debt, especially excessive debt, and if you're taking on that debt to magnify your investment returns, that's very dangerous. I mean, it can work out, and it's worked out for people, but I think there's a lot more people that have been burned going that route than by the paying off your debt and investing slowly and that kind of thing. The old grandma's way of making money.
Yeah, and so again, my name's Rob Morales. I'm here with Francisco Ayala. We're here to answer your questions. We got about 10 minutes left to kind on the show today.
Sure.
I saw Mario log in. Hey, Mario, how's it going?
Hey, Mario.
all my Douglas peeps are logging in. So if you're a member, Burger King over there on, what is it? Is it 12th Street? What was the street?
No, it was well, actually, that's a good
14th Street.
No, it was about 14th, maybe 15th or so, but over the underpass over there.
Yeah, it's not even Rebel anymore. So okay, so I don't even go to that Rebel anymore. I forgot what the name is. Express something. Maybe again Mario knows or somebody knows. But they got rid of my little cheese bean burrito. That was like the only reason I went there. And they don't get my gas money either.
Hmm.
So if anybody in Douglas, when I go visit my mom, if anybody in Douglas can go talk to the Rebel Mart or whatever it is called now and get those bean burritos back, it'd be
as long as the gizzards are there, that's all you need.
I never went crazy with the gizzards. That's a little bit too much for me. But again, we're taking questions. So, we're talking about just different things. We're talking about inflation, how it affects us, and how it will affect us, I think, in the long term. I mean, I'm talking, and I've probably been in a couple arguments with Violet over the last few months about inflation and the price of houses. We've been putting in offers, and we put in, I would say, reasonable offers to us. It doesn't make sense to me to offer 40, 50,000 above list price when the list price is already 40, 50,000 above. It's just crazy insane right now. I don't know who's buying these houses. I really want to say it's investors and people who just are in the FOMO moment. I don't know, and it is affecting everything. Inflation, everything that's happening right now with the stimulus, everything, you don't see it necessarily on a smaller scale, but you do see it on a bigger scale. And that's the concern that I have.
To be honest with you, you're not just competing with a buyer, with your neighbor next door for these houses. There are people moving. Obviously, you hear a lot about people moving from more expensive places to lower expense. So California, people coming over here, and from the coast, kind of going to these towns, and that's where you're seeing the big price jumps, right? But the other thing, aside from the local people and the out of town people, the out of state people, is you're dealing with institutional money, okay? Because what happened after the crisis is that builders, slacked off on building, new homes. And so they didn't build enough to satisfy the growing demand, the growing economy. And so institutions now, they know that, and I was reading an article that now institutions are buying a whole subdivisions at a time, You're talking about, $700 million, $1.5 billion, and they buy the whole subdivision all at once, and they're going to rent them out, and they're turning them into rentals. And so, or they're flipping them, or whatever they're doing with them. But now you're dealing with institutional money, and so, and here you are saving, 5% down, 10% down, whatever it is, um, putting in an offer with 10% down, where you have an institutional buyers, a hedge funds, the private equity money, that are coming in with billions of dollars and just buying the whole lot. And so, yeah, it is crazy out there. Uh, Not just the real estate market, the stock market is the exact same way. Is it okay if I share something?
Oh, absolutely. Let me.
Uh, Host has disabled participant sharing screen, so I'm not able, I guess.
You're
Let
good
me see.
now, sir. Share away. So, I mean, to that point, as you're getting ready there, I will say I'm probably contributing to that. So I had a couple of investors make cash offers on a couple houses that I had, and we accept them because that was the best interest of the seller. So I do see that on there. I think there are hedge funds and probably REITs purchasing these houses because they're, in my opinion, betting against the housing market. So go ahead,
Yeah.
sir.
So can you see the screen here for the kind of a little
Yes, sir.
chart, just a stock market chart? So again, so basically this is a 3-year view. We had the big dip here last year. So this is the last year, straight up, 50% gain on this thing. So I'm going to condense it down to the last year. So again, this is, one year, it's been basically straight up. What I want to show you though is this little thing right here, this little edge of how far we've come from, these are the moving averages, how far away we're coming from the moving averages. We don't really get away from the moving averages that much before we start to pull back somehow. Like you'll see, when we do pull back, quite a bit from these things, something kind of, the market starts kind of reevaluating itself and pricing. And so that's, to me, there's a lot of exuberance out there, a lot of irrational exuberance, as Bernanke says, because it's just, yeah, it's crazy. It's the stock market, it's the real estate market, it's Bitcoin, it's the NFTs, it's all these things that it's just way too much money out there. I would be cautious right now.
Yeah, I mean, I'm not saying go cancel your trip to Vegas, but definitely don't put 10,000 on black because that was your stimmy money.
Yeah, I mean, I would say if people have money to invest right now, take it easy. Don't rush into it. Take it on a dollar cost averaging. Put in money here. Wait a couple months. Put in money in a couple months. Wait. It's because there's no rush right now to be going into the market, given the prices, given the valuations. I'll show you one other quick screen. This one here. Can you see hold on one second. Can you see the screen?
Yes.
This is the Shiller PE ratio. Basically, it takes, again, we talked about price per earnings.
Yep.
Shiller adjusts it because it's inflation adjusted. Okay, so that's kind of the neat thing about this. It's an inflation adjusted ratio for the previous 10 years. I'm not going to go into the details about it, but as you can see, we are way up there valuation wise. This is the .com. This is the Great Depression. It's only in one other instance have we been as high as this, and that was the .com bubble. And it's just look at that big jump in the last year. It's huge, So what that tells me, we're way, I wouldn't say way overvalued, but we're, I think, pretty overvalued. There's no sense in jumping into the market right now, in my opinion.
And you mean the stock market or just any market? Because I would.
Well, I mean, any market, to be honest. I mean, unless you get there's great deals out there, whether it's a home, whether it's a stock, whether it's whatever it is. There's great deals out there, but it's going to take you a long time to fight that deal. People don't have that time. People don't have the time to put in them. They have lives, they have careers, they have kids, they have events, they have all this other stuff. It's very hard. I mean, unless you're a real professional, that's all they do, look for bargain houses, look for bargain stocks and stuff like that, it'll be very hard to kind of make a killing right now.
Yeah, and I do feel that there's pullbacks, and we've come basically to the end of the show. And I want to thank you, sir, for attending every week here at Finance Friday on RCO Network at the noon hour. So if you guys want to join us next week, we can talk a little bit more about those hot stock tips. We'll talk more about candy corn and how that affects our global economy.
Go look for the Nutzo, Nutzo. It's a great thing, and I don't know why I like it. So yeah, you should try it.
Is it a reflection on your personality, sir?
It is, because it's a lot of mix of things. You know, it's a peanut butter made of. That's like, actually, it doesn't even have peanuts. It's a nut butter, but it has very sophisticated kind of things. And so I'm sophisticated, not so sophisticated. Yeah, we do it. It's a great match.
It's a protein thing, right? Because
it's a protein thing. Yeah, protein, kind of healthy fats kind of thing.
Yeah, I know. At one point, I was vegan. You know, I've slipped back to chicken a little bit. I haven't quite indulged in dairy too much, but
Yes.
just a good slice of pizza on a Friday evening with a glass of wine is fabulous, I will say.
Yes, or a burger.
It definitely hurts. So I want to appreciate your time, sir. Thank you for attending today. And anybody who has any questions, especially for next week, go ahead and put them in the comment section. We'll get to those. Senor, did you want to say anything before we head out?
No, just, again, focus on what really matters to you. Don't focus on the noise. There's a lot of noise out there with regarding the stock market or anything else for that matter. So focus on what you like, focus on your family and friends, and have a great weekend.
Yes, sir. So this is Robert Morales, RCO Network. We'll see you on Monday for Monday Market 15. So if you tune in at 2 o'clock, it'll be me and Ashley Miller from Great American Title. Thursdays are CEO Network unedited show. I'm tripping up on everything. It's Friday. So it's unedited show on Thursday at 5 o'clock. So if you want to tune in, you'll get to know our CEOs and entrepreneurs out there in the Phoenix area. And again, we'll be back here next week, Friday at the noon hour. So catch you guys soon.
Bye-bye.